I'm going to point out a couple things about silver stocks, and in certain instances, it's good to do a little bit of this, not a total big bet. Uh, the people with really big money, they're probably going to move when they've got to invest in precious metals. There's too much money that some people have that they can't actually buy enough physical coins, even if they wanted to, or bars. They would have to move money into stocks, and that's one reason you're probably going to see these stocks go up. But I'm pointing out another angle to this, so I don't know, please be patient with this, because I know some people in the physical silver don't want to hear about stocks. But doing another angle on this, there is some people that believe there's going to be a major crash or pullback in the stock market in general, and that may pull down the silver prices as it did in 2008. And you notice what happened to this stock, Endeavor Silver Corporation. It went down to 85 cents for a low in 2008, late 2008. I think it was late October or November, when it was at a low point when the S&P crashed and everything. Now, this is actually a good company. It seems to be running fine. You know, they're making money. And from 85 cents, the price went up to over $12. It was a couple points. It's around $11, $12. So it moved a heck of a lot more than the price of silver. And that's generally what the miners do if you have a good running mine, good running company. On their balance sheet, their cash position has improved greatly. They had $3.5 million at the end of 2008. Cash is $68 million. Up almost 20 times, and I'm sure it's a lot higher in 2011 whenever they come out with their financials at the end of the year. On the income statement, they're producing their revenues a lot higher. These are very simple statements. I don't know what's behind them. You know, you really can't tell, you know, what their operating costs are. Where it's a very generalized statement, but they were losing money in 2008. They're making money in 2010. I'm sure they're making money in 2011. Silver Wheaton, the same thing, much bigger miner. When the stock market crashed, the price of this stock just went right through the floor. It went down to $2 a share, and then it went up to about, I think it's $46 a share. So it went up 23 times. Now, what I'm pointing out is this. Now, if there's a market crash and the spot price of silver went down a lot, which I don't think is going to happen, but if there is going to happen, if it does happen, and you're looking around for physical silver, you might not get anything close to spot. And that seems to be what's happening more recently in September, that it was the stocks were out of silver. The physical stocks. Maybe if there's a really hard pullback, if this happened, some people think it might happen. I personally don't. But if it does happen, and you can't get physical silver anywhere near spot price, you might want to consider putting a little bit of money in these stocks. I mean, I don't think it's that terrible of an idea. Just watch your broker. Don't use MF Global, of course, or anybody like that. Same with this. The revenue went up a lot. Their cash position improved greatly too. It went up like, I think it was like 60 times. You know, it's from $7 million to $428 million cash and cash equivalents. So they have a lot of money they can wheel and deal with and invest. I want to point out something about Sprott. This is the only ETF that I trust, period. I have some money in this, not mainly. That's not really where the bulk of my money is, but some money's in this. But I want to show this compared to the SLV. It runs a premium. SLV is the one in red, and they're indexed when its Sprott fund started back in late 2010. I think it was end of October, around that date. And I indexed both funds, you know, just with this Yahoo chart. It's very simple to do. PSLV, the physical PSLV, the one that's run by Eric Sprott, it runs a premium. So, you know, as the silver prices, maybe if it went from $35 around what it is today to $68, $70 for spot price, you might see even more of an additional premium, even percentage-wise with Sprott, with this fund. I would guess. So, you know, if you can't find physical silver anywhere near spot, pullback, you might want to consider the stocks for a small portion of money, or this ETF and Sprott. I don't think it's such a bad thing to put a little money in that, because nothing's 100% sure bet, including physical. This was something that Brother John F. pointed out. I pointed out again, but I'm going to do it one more time because I think there's a couple other things on here that doesn't make sense to me at all. This is the world supply of silver and demand from the silverinstitute.org from 2001 to 2010. And it shows all the areas where supply comes from: mining, net government sales, old silver scrap, producer hedging. And then if there's a difference between supply and demand, it goes in either this implied net disinvestment or implied net investment. So they're showing an account for all the demand: industrial, photography, jewelry, silverware, coins, and metals. And then what's left over is for the bullion stocks of the European dealers and the ETFs. Now, if we look at ETFs, and there's actually where it states it in black and white on another page in this report, but this is the chart. There's about 600 million, you can see if you draw this line right across here, there's about 600 million ounces that was put in this ETF. The black line represents the silver price, okay, but these other colored areas represent about how many ounces are in the ETFs. There's about 600 million ounces, and this was put in there from 2006 to the end of 2010. Now, going back to this, Brother John found this, and I thought it was excellent. When you add up everything from 2005 to 2010, which was all the demand not accounted for in these other categories, so it must be the ETFs, it only adds up to 438 million ounces. Yet there was 600 million ounces put in the ETFs. Major discrepancy right there. Number two was, this was also in a report. This is a graphic of the European dealers' identifiable bullion stocks from 300 million ounces to about 900 and something. I think there's a difference. It looks like an increase of 570 million ounces. Maybe this went up to about 870 million ounces. It's hard to tell because it's not, they're not giving raw numbers here. But looking at the chart, it looks very close to about 570 million ounces increase of bullion stocks of the European dealers. Again, where did this come from? We have what could have went into all the ETFs, and the increase in the bullion stocks of European dealers was 438 million ounces. So if you take 600 million ounces in ETFs, an increase in bullion stocks in European dealers of 570 million ounces, less this number, you have 731 million ounces unaccounted for. Now, sometimes there could be something off a little bit, but that's off a hell of a lot, and I don't know why. But one other thing I picked up about this report, and it just doesn't make sense to me, and I don't know where I can get other numbers for that worldwide coin production, but it shows the coins for 2010, 101 million ounces. So I'm looking at U.S. Mint. This is 2010. Silver sales in ounces, number of coins, almost 35 million. That's his number on the bottom. And already this year there's more ounces. I think it's, I don't know, if you just look at 11. Excuse me, other way around. This is year 2011. It's already exceeded all of 2010. It's over 37 million ounces. Just that, you see that number for 2011. And this is right on the U.S. Mint's website. It's very easy to look up. Now, the other mints, I really don't know where to get the numbers from. But somehow, I don't think the U.S. Mint alone counts for 35% of all the coins minted in the world. That seems to be off. I don't understand where that's coming from. I don't understand. Somehow I'm beginning to wonder about this information they put out, how accurate it is in a lot of different ways. Um, you know, it didn't come from our mining because our mining was 38 million ounces, and we had 35 million ounces of silver produced, and I don't think we imported silver from China to produce American coins. I just knowing how the government is, they usually don't do that type of stuff. So I'd assume it came out of this net government sales of 44 million ounces, so that could be accounted for. But I don't think the U.S. government minted 35% of the coins, silver coins in the world. So they're saying there's 101 million ounces here of coins in millions of ounces, right? 101 million ounces. We go back to here, 2010. It's almost 35 million ounces. So I look at this report, I kind of wonder about it, the whole thing in a lot of different ways. I heard there's been criticism of this report every year it comes out. I kind of wonder why. But again, if you're looking at Sprott's fund, Sprott is this little area on the top here. This is page 15 on a PDF that you can download from the silverinstitute.org. But Sprott is this little portion here. I think he actually does have the silver from everything I read. And then you look at iShares silver, big giant portion, I think a lot of these other ones, they probably don't have it because there's just too big of a discrepancy. So, if you're going to go into one ETF, that's the one I chose. I don't go into like all heavy or nothing like that. I go mainly physical, but kind of making a point that if there's this radical pullback and the price of silver is so low and it's, you can't get physical anywhere near that price, you might want to consider the ETFs in that case, or some of these stocks just don't do a major portion of your money. I think a lot of people wouldn't be buying a lot of silver anyway. That's to me is not a bad idea. I don't think the world's going to cave in on the electronic markets right away. And then when you make some money on it, just pull it out and use it as cash.